Hello and welcome to India's longest running show on startups and entrepreneurship. I'm Shireen Bhan. Today on the show, we put the spotlight on what it takes to build a company, the journey of an enterprise from being an idea to a startup to a full-blown IPO-ready business. And the journey is not an easy one. Founders and investors need a long-term vision that can take the business from being a pony to a unicorn, though a unicorn doesn't necessarily have to be the mission or the objective. It's creating value that should drive enterprises. That's the name of a new book written by life cycle investor Sanjeev Agarwal and angel investor, mentor and management guru T.N. Hari. The book describes the tale of every startup aspiring to become a unicorn. Right from explaining the principles involved in scaling, the book is also peppered with many anecdotes and insights derived from the author's experiences, ranging from building and guiding startups to what goes into attaining the unicorn status and becoming public listed companies. It also looks like it will be a useful guide for entrepreneurs, leaders and investors involved in building and, more importantly, scaling up businesses. Joining me today are the authors themselves, Sanjeev Agarwal, the senior MD and co-founder of Helion Venture Partners, and T.N. Hari, angel investor and author. Gentlemen, many thanks for joining us and congratulations on your book. Sanjeev Agarwal, as the foreword by Nandan Nilikani also says, that the aim is not to obsess about becoming a unicorn. The attempt on the part of every startup founder should be to create value, and if the unicorn status happens, so be it. But I want to talk to you about building a business that's built to scale and built to last, because that has been something that you've been driving for several years now. And you talk about how it is important to marry the mega trend with the market opportunity, and that you believe is the fundamental of trying to build a business that can scale up. Explain to us your theory.
Thank you, Shireen, for getting us on your show. Just to give you a little bit of backdrop, Hari and I have been involved with multiple scale-ups since 2000, so about 20 years of our journey, both as entrepreneurs and as executives and as board members. And one thing that has become clear in the hindsight is that you want to be building a business which is in the middle of a mega trend. And how can I illustrate this to you? Very good example would be a company called Azure Power, which has gone public on NASDAQ, and it's a Helion portfolio company. And that company, till about 2 years back, was really not catching the investor attention. But ever since the ESG investing or the environment-friendly businesses became the talk of the day, the Azure stock has tripled in literally last 1 year. It is now close to a $2 billion market cap company. And the lesson from that is very clear, that if you are sitting in the middle of a mega trend, then the way investors begin to allocate capital and the way customers start buying your goods and services is of a totally different scale. And I think the other very interesting mega trend that you and I are witnessing is the digitization of various industries. It started with retail, and now it has progressed to e-commerce. So one of our learning is that you want to be building a business which is in the middle of a mega trend, because that itself will propel you.
Yes, that's an important point that you make, that, and I'm glad that you gave the example of Azure Power, because this was also a company that perhaps some would argue was a little bit ahead of the curve. And now with the move towards more impact and ESG-driven investing, it's a company, as you point out, that is in focus. But speaking of the mega trends that companies can now capitalize on, and Hari, speed to market is also important. Being first to the market is also important, given the fact that we've seen a lot of sectors at this point in time being disrupted on account of digitization. What are the mega trends that you believe entrepreneurs today should be focusing on?
So, Shireen, I think I can clearly see one mega trend taking shape. I think we are seeing the emergence of Middle India. So Middle India is ultimately meeting its tryst with destiny. So you can see that, Jio, the way it raised capital in 2020, in just a few months, it raised more capital than the entire startup ecosystem raised in 2018 and 2016, the peak years. So I think you can clearly see a mega trend taking shape, which is that you have the rails already laid out in the form of Aadhaar, in the form of payments platforms, and the ecosystem is ready to ride on this. So I know there's a the rise of Jio is an extremely interesting story, and I think there are two clear lessons. Lesson number one is that is clearly you don't need a VC funded or creating a company and scaling a company is not the exclusive preserve of VC funded companies and 30-year-olds. Even very large companies led by extremely ambitious and imaginative founders can actually change the game completely. So I think clearly I see a mega trend taking shape, which is the entire fight for 400 million Indian consumers in tier 2 and tier 3 cities in India. That's the middle India, I think, is clearly taking shape. That's the biggest mega trend I can see.
One of the biggest mega trends, the rise of middle India, in the words of T.N. Hari. But since you talked about Jio and the kind of disruption that's brought in across a bunch of sectors, Sanjeev Agarwal, let's talk about the David and Goliath story and how that's playing out and how that's likely to impact the rise of this middle India and customer acquisition there. What will startups have to focus on as they take on global gorillas? What is it that they can bank on? Through the course of your book, you talk about many examples. You talk about the Ola example. You also talk about the Big Basket example. But what is it that Indian startups who are up against the global gorillas need to be mindful of?
I think, Shireen, if I were to enlarge this question and say what kind of businesses the young entrepreneurs should be building that can scale, then one prerequisite is that they should participate in a large market. And by large market, I mean something which is about $10 billion in size. Our experience tells us that in a young market or in a young industry, you can take about 5% market share. So which means that if you are in a $10 billion industry, you can do a revenue of 500 million, and assuming revenue gets valued 2 times, you can create a $1 billion company. So that, I think, is the starting point of an entrepreneur. That is good news and bad news, because India now has many $10 billion markets that entrepreneurs can go after. And our portfolio companies like Make My Trip, Basket are all examples of 10 billion excess market opportunities. But what happens is that when you pick large markets, then you also experience, as you mentioned, the play of large gorillas. So it can come in the form of an Amazon or a Reliance. And one way we have seen entrepreneurs play this is to really align with another gorilla. So I think a very good example is that Big Basket took a minority investment from Alibaba. So it was not alone, it had backing of another gorilla. Or Make My Trip getting backing from C-Trip and then eventually merging with IBGO and getting Naspers as their shareholder. So I think one very interesting way by which entrepreneurs can build a company is to ally with another gorilla who's willing to take a minority position and therefore letting you build an independent company. But then you can take the counterparty head on.
Allying with another gorilla is perhaps going to have to be an inevitable strategy for many local entrepreneurs. Hari, just to take that point forward, Sanjeev talked about how you brought Alibaba on board to take on the gorillas from the West. Do you believe that consolidation will be inevitable as the gorillas get larger and more deeply capitalized?
Yes, I think to a large extent, consolidation is pretty much inevitable. And to add to Sanjeev's point of gorillas and your question about Goliaths and Davids, I think one of the critical components for a young startup to be able to fight these gorillas is founder ambition. I think that is extremely critical, and we've seen quite a bit of that in the Indian ecosystem. So, for instance, Ola raced neck and neck with Uber in India just because of a strong founder ambition. And the interesting thing is that you don't have to get every dimension perfectly right. If the startup gets one dimension right, it can, help, cover some of the other shortcomings. So despite some of the very well-known shortcomings of Ola, I think the founder ambition has been able to pull it off, and they've been able to successfully compete with Uber, both in India as well as overseas. BigBasket also has always been able to stay ahead of the pack of online grocery players. I think to sheer founder ambition and clarity, both of these things become really important when you need to be able to compete with gorillas. And some startups become very big and they themselves become gorillas at some point of time. And therefore, it's important for all these startups as they scale and become big to continue to remain agile by being very customer centric. Otherwise, they reach that inevitable flattening at the S curve at the end. And some other more agile startup that is closer to customers will end up disrupting them.
So in the future, Hari, yes, Sanjeev, you wanted to make a point. Go ahead.
Yeah, I was saying that another interesting facet is that if you can be a first mover in an industry, then that also gives you a very strong tailwind. And if you are a specialist in a particular vertical, then it can be hard to create a specialty business inside a horizontal company like an Amazon or a Flipkart. For example, grocery is a very different category than books or clothes. So those are two other dimensions through which you can take on gorillas, that either you build a very strong specialty business, which requires a lot of reconfiguration for the existing gorilla, or you create a lot of first mover advantage. You have a 3-year lead or a 5-year lead. And then the other one is, I think, if you can be very, very fleet-footed, because we have found that large conglomerates take their own time in responding to the marketplace, while entrepreneurs can really move at the speed of light. So I think if you can be very fleet-footed as an entrepreneur, then you can put a distance between yourselves and them.
Yes, those are important points to focus on. Try and be first to the market. If you're not first to the market, then try and create a moat by way of specialization or very clear differentiation and be agile and nimble. But to the point that you were making, Sanjeev, let me put this to you, Hari. Do you believe that this next round of consolidation that we're likely to see will be driven by Indian conglomerates playing consolidator?
It's very much possible, Shireen. I think you can clearly see how things are shaping up. So the fight for the 400 million Indians I talked about, Amazon is clearly in the play. They're doing everything to prevent Future being sold to Future Group being sold to Reliance. Reliance is clearly in the play with the super ambitious founder. Tatas have all been talking about a super app. And Tatas are an Indian conglomerate and Reliance is an Indian conglomerate. So I think the Indian conglomerates have so far stayed away from the startup ecosystem, allowing funding to happen by venture capitalists, hedge funds outside of India. But I think gradually they're stepping in, and I think they also have an advantage because they understand Indian markets very well. And I think they can bring that strength to bear in growing, this market, which some other players may not easily understand, especially tier 2, tier 3 India is something what, for example, a Tatas or the Reliance Group would clearly understand. Understanding how every customers behave at a pin code level is very critical for T2, T3 city scaling.
Hari, since you've mentioned the Tatas twice, I can't not but ask you, when are we likely to see the Tata BigBasket deal close? The expectation was that it would have been at the end of November. Hasn't happened. We're given to understand finalizing or ironing out the fine print. But when should we expect that to close?
This is a very tricky situation because I'm not the spokesperson for the BigBasket on this topic, Shireen, I think, and these are things that you would know better. than what I would. So I would just refrain from saying anything.
Okay, okay. So you're going to pass on that. But since you talked about the founder's ambition and that being something that makes a big difference, let's also talk about where the founder's ambition can sometimes take the company awry, especially if it's not backed with the right product. And I know that you've given several examples in your chapter, Sanjeev Agarwal, where you talk about scaling up. And there are many cautionary tales there as well, where you believe that you need to get the product right before you start to scale it up. What would you ask founders to be mindful of therein?
Shireen, first, let me give you an example of a great founder ambition. And that doesn't come from India, but from China. There is a company called Lenovo. I'm sure we all know Lenovo. Lenovo was a distributor of IBM. Distributor of IBM in China and ending up buying the principal IBM itself. So that's the extent of founder ambition that one can see. And I think in India, so that is actually, to me, a classic example of how far you can see. In India, the places where we probably lost a little bit of our act was in the e-commerce, where for a while there was a fight between Flipkart and Snapdeal, more on vanity metrics like GMV, rather than customer experience. And that was fueled by infinite capital allocation that was coming from large VCs or private equity investors. And I think the good news is that the Indian ecosystem corrects very quickly. So in the second phase that Snapdeal is currently on, I think they are a lot more customer-oriented, unit economics savvy. So that is, I think, a place where sometimes you get ahead of yourself. But I think Indian entrepreneurship situation is so efficient that any such misdemeanors get corrected quite quickly. So I think at this point in time, more startups are actually focused on enduring metrics like unit economics and customer experience than was probably the case in the first wave.
You're absolutely right. We've seen that shift and that change take place over the last few years, moving away from vanity metrics. But that, of course, is part of the evolution of the ecosystem itself. And great example there of Lenovo and what founders' ambition can drive a company to do. We will take a break on that note, but when we return, we continue our conversation with Sanjeev Agarwal and T.N. Hari on their book, From Pony to Unicorn, and what it takes to build a business to last. That and more when we return. Welcome back. You're watching Young Turks, India's longest running show on startups and entrepreneurship. And I'm still in conversation with Sanjeev Agarwal and T.N. Hari on their book, which talks about building businesses to last. Sanjeev Agarwal, it's not just about building businesses that last. What is key now to getting businesses to last is the ability to adapt. So building businesses to adapt, that is crucial. You spend a lot of time in the book talking about strategic choices that companies must make, the inflection points and pivots. Given where we find ourselves today in the Indian startup ecosystem, what do you believe should be the playbook?
I think, Shireen, we have seen that the companies that have scaled, they are all very good at mastering pivots and navigating inflection points. And a great example that you and I are aware of is Make My Trip. They were historically an air ticket provider to consumers. And that industry being very concentrated didn't yield very good margin structure. And the adjacency that they found was hotels. And when the hotels clicked, the company got totally re-rated, something that Yatra did at a much later point in time. And now you can see the gulf between Make My Trip and Yatra. So I think one very important trait of these game changers or entrepreneurs is that they find adjacencies very seamlessly. A big basket, for example, going from weekly grocery to daily grocery by making many acquisitions is another good example. So these game changers are constantly evaluating what's around them and making those pivots and hitting those inflection points. And I think examples galore. So they're very good at finding new product cycles versus a professional CEO who's very good at optimizing the current product cycle. I think that is the distinguishing trait of a founder, that he's all the time looking for the next big thing which is on the horizon, but is still adjacent to what he's doing currently.
And that's a fine balance, isn't it, Hari? Defending the past, but yet focusing on the future, to the point that Sanjeev was making, that the difference between those who will survive and continue to build lasting businesses will be the ability to find new product cycles, new revenue streams. How are you seeing this in the current milieu that we're faced with?
See, I think, the point that you made is spot on, which is that it's important to be able to stay grounded. At the same time, it's important to dream that you can fly. I think when you're flying, you shouldn't forget that I should remain grounded as well. I think it's getting this balance right, which is very critical. If you don't get this balance right, if you're too grounded, you will never try out new things. If you're always flying, trying new things, you will never be grounded, and therefore your journey will break. So I think it's very critical to get these pieces together. There's other important thing, which is that about the product market fit. A product market fit is often talked about, but it's not a one-time, exercise that you do and believe that, you've got a perfect product market fit. A product market fit is always being tested. There are changing consumer preferences, changing consumer trends. I think a company needs to be aware of this, be very close to the customer, be aware of these changing consumers, and be willing to reevaluate the product market fit. Because the flattening of growth is a very clear indicator that there is some problem with the product market fit, and the company has to figure out what they need to do, what are the changing consumer trends that they need to be aware of. And what happens is that as companies become bigger and bigger, the founders as well as the senior management teams tend to get a little remote from the field. That's where the action is happening, and from both customers as well as from employees who are close to these customers. So it's important for customers, for the founders to stay very close to the ground, have their finger on the pulse of changing consumer trends, constantly tweak the product market fit to stay relevant is very, very critical.
Yes, staying relevant to the customer is, of course, crucial. Customer centricity is one of the commandments that Sanjeev and T. N. Hari have listed out in their playbook for scale. Sanjeev Agarwal, let's talk about the other C, and that is culture, before I let you go, because that's also imperative. What is it that you believe a living organization, a learning organization needs to ensure founders put in place to have a culture of improvement and excellence?
I think, lovely, culture to my mind is about living the values. So it all starts with building some shared values or some principles or some beliefs that you care about and creating them along with your core management team. And then making sure that they are grounded in performance management systems, reward systems, recognition systems. So one value can be actually customer centricity that we talked of. And you make sure that all your top managers, their bonuses are tied to customer satisfaction surveys. So I think culture is like Hari says, is an invisible force. It's like an operating system of a computer, which is not visible to you because you only see the applications. But this is something lying underneath. And if you get this right, then the need for supervision comes down very, very significantly. because people know how this company operates, and you don't have to go to ask your boss when you have to make a difficult decision, because culture is a very good
Yes.
guide to making the right choice. I think lived values which are grounded through the organization would be my advice to young entrepreneurs. And I think that is where the wheels come off. There is too much focus on fundraising and growth, and you are leaving behind one very
Huh.
strong foundational element, which is culture. And I think that is where companies like Make My Trip, Big Basket, Live Space, they have built themselves a great place to work at by virtue of embedding a strong culture. Becomes even more relevant because of the number of employees that they are
Yeah.
inducting at a breakneck speed.
Absolutely. That will be crucial as you build an organization with scale. Sanjeev Agarwal, TN Hari, it's been an absolute pleasure. Many thanks for joining us here on Young Turks. We wish you the very best of luck with this latest venture of yours, this book that the two of you have co-authored. Thanks for sharing your insights with us here on Young Turks. With that, it is time for us to wrap up this special edition. We will take a break. There's a lot more coming up. Don't go anywhere. We're back in a moment.